AI Stock Investment Recommendations, 2026. The AI Gold Rush. Which stocks are actually worth your money in 2026? The hook. Here's a number that should stop you in your tracks. NVIDIA's market cap has grown by over 800% in just 3 years, making it one of the most valuable companies on Earth. But here's the real question that investors are wrestling with right now. Is the AI investment train still boarding passengers, or has it already left the station? The big picture. Let's be brutally honest about what's happening in AI investing right now. We're in the middle of what might be the most significant technological shift since the internet revolution. The companies building AI infrastructure, developing AI models, and deploying AI applications are reshaping entire industries. But not all AI stocks are created equal. The AI investment landscape in 2026 breaks down into several distinct categories. The infrastructure giants, who provide the picks and shovels, the model developers who create the intelligence, the application builders who bring AI to end users, and the legacy tech companies racing to stay relevant. Think of it like the California gold rush. The people who made the most consistent money weren't always the miners. They were the ones selling mining equipment, blue jeans, and transportation services. In AI, that translates to companies like NVIDIA, which makes the GPUs that power almost every major AI system. The deep dive. The infrastructure king's NVIDIA remains the undisputed champion of AI infrastructure. Their H100 and now H200 GPUs have become the standard currency of AI development. According to industry estimates, NVIDIA controls roughly 80% of the AI chip market. When companies like OpenAI, Anthropic, Google, and Meta need to train their models, they're buying NVIDIA hardware. But here's what makes NVIDIA particularly interesting. They're not just selling hardware anymore. Their CUDA software ecosystem has created what many call a moat that competitors struggle to cross. Developers have invested years learning NVIDIA's tools, and switching costs are enormous. AMD has emerged as the credible alternative. Their MI300X accelerators are gaining traction, especially among companies looking to diversify away from NVIDIA dependency. Meta has been particularly vocal about incorporating AMD chips into their infrastructure. The company offers a compelling value proposition, competitive performance at lower price points. The cloud giant's AI play Microsoft has made perhaps the smartest bet in AI by securing exclusive commercial rights to OpenAI's technology. Their Azure cloud platform now offers GPT-4 and other cutting-edge models as a service. But Microsoft's AI ambitions extend far beyond being OpenAI's distribution partner. They're embedding Copilot AI assistants across their entire product suite, from Windows to Office to GitHub. Alphabet, Google, shouldn't be underestimated, despite the narrative that they're falling behind. Gemini, their latest AI model family, has shown competitive performance with GPT-4. More importantly, Google has something no one else has: YouTube's video data, Gmail's communication patterns, and Search's understanding of human intent. Their DeepMind division continues producing groundbreaking research. Amazon is playing a different game through AWS. Rather than trying to compete with OpenAI directly, Amazon is positioning Bedrock as the model-agnostic AI platform where enterprises can access Claude, Llama, and other leading models. Their custom Trainium and Inferentia chips are gaining adoption among cost-conscious AI deployers. The pure-play AI companies. This is where things get interesting and risky. Palantir has emerged as the enterprise AI platform of choice for government and defense applications. Their AIP, artificial intelligence platform, allows organizations to deploy AI models on sensitive data while maintaining security requirements that cloud providers can't match. C3.ai targets enterprise AI applications with pre-built solutions for specific industries. While the company has faced criticism for slower than expected revenue growth, they've built genuine expertise in deploying AI at scale for oil and gas, manufacturing, and financial services. SoundHound AI has carved out a niche in voice AI, with their technology powering voice assistants in cars and restaurants. It's a high-risk, high-reward play. If voice interfaces become the dominant way we interact with AI, SoundHound is well-positioned. The dark horses keep an eye on Taiwan Semiconductor, TSMC. They manufacture the chips that NVIDIA designs. No matter who wins the AI chip wars, TSMC probably makes their products. They're expanding manufacturing capacity in Arizona and Japan, hedging against geopolitical risks. Broadcom is quietly becoming essential to AI infrastructure through their networking chips and custom AI accelerators. Google's TPUs are manufactured in partnership with Broadcom. Different angles. The bull case AI adoption is still in the early innings. Enterprise AI spending is projected to grow at 30% plus annually through 2030. The companies building this infrastructure will benefit from sustained demand that could last a decade or more. Moreover, AI isn't just a software story anymore. It's becoming essential infrastructure like electricity or the internet. Companies without AI capabilities will increasingly find themselves at a competitive disadvantage. The bear case valuations are stretched. NVIDIA trades at a significant premium to historical tech valuations. If AI development hits technical barriers or adoption slows, these stocks could face significant corrections. There's also concentration risk. Much of the AI gains have been captured by a handful of mega-cap stocks. Diversification within the AI theme remains challenging. The regulatory wildcard governments worldwide are racing to regulate AI. New requirements around AI safety, transparency, and bias could create compliance costs that favor larger players, or could open opportunities for new entrants offering compliant by design solutions. What this means for you. For individual investors, the key is matching your AI investment strategy to your risk tolerance, conservative approach. Stick with the diversified tech giants, Microsoft, Alphabet, Amazon. They have AI exposure, but aren't betting the entire company on it. Moderate approach. Add NVIDIA and AMD for infrastructure exposure, balanced with cloud giants. Consider a tech-focused ETF that includes AI leaders. Aggressive approach. Include pure-play AI companies like Palantir or C3.ai, but size positions appropriately. These could deliver outsized returns or significant losses. The smart money approach. Dollar-cost averaging into positions rather than trying to time the market. AI is a multi-year trend, and timing the perfect entry point is nearly impossible. The bottom line, AI investing in 2026 isn't about finding the next hidden gem. The major players are well known. It's about understanding which business models will actually generate sustainable profits as AI moves from hype to deployment. NVIDIA remains the safest bet for pure AI infrastructure exposure. Microsoft offers the best combination of AI upside with diversified business stability. For those willing to accept more risk, Palantir and AMD offer compelling risk-reward profiles. The critical insight is that AI isn't a bubble. It's a genuine technological transformation. But not every AI stock will be a winner. The companies with real revenue, sustainable competitive advantages, and paths to profitability will separate from the pretenders. What should you watch for? Pay attention to enterprise AI adoption metrics, not just model capabilities. When CFOs start treating AI spending as essential rather than experimental, that's when the real growth phase begins. And by most measures, we're just entering that phase now. The AI investment opportunity is real. The question is whether you're investing in the builders or just the believers. Key stocks to watch. Disclaimer: this content is for educational purposes only and does not constitute financial advice. Always conduct your own research and consider consulting a financial advisor before making investment decisions. Sources and references: company earnings reports and investor presentations, industry analyst reports from Goldman Sachs, Morgan Stanley, and Bank of America, market data from major financial platforms, technology industry publications and research reports.